Eric Muathe at Muathe.com with part 1 of this weekend's market analysis video for the weekend of August 5th and August 6th, 2017. Now what's interesting here is that we have almost identical analysis for this video as the previous week's video analysis. In fact, not much has changed in terms of the charts and markets are still strong. And let's go back, take a look at some of the things that we had looked at last week, take a look at current market situation. Keep in mind that this video, I'll try and keep it a little bit shorter. Why? Because nothing has really changed. So we see that this week, the Nasdaq is down slightly. Oh, by the way, I am recording this with about, let's say about 2 hours before the market close for the week. And here we can see that, yes, the market made an improvement to new highs on the Nasdaq. But this came at the expense of the technicals, which made a lower high. That negative divergence could be the reason why we stalled ever so slightly. It's a healthy pullback as of right now. And keep in mind that as long as the Nasdaq is holding above, and this week it did try to punch through and crack below the previous weekly closing high. The level was 35.05. 0.80. We've tried to drop below this level over the last 2 weeks since the breakout. The market continues to defend that price. The conclusion there is that as long as the market is holding and trading above that previous high or the previous breakout line, this market continues to be healthy. So as long as it's holding, one can expect there's going to be a move to the upside. Now, of course, we know that if the market would crack below that, then that would be asking questions of the market. We also know that on the Nasdaq weekly, this line will still offer some type of support when tested. So we still have to break below this line if there's going to be any serious pullback. And this is from the 2-year weekly for the Nasdaq. If we take a look at the daily for the Nasdaq, yes, we are getting this recent pullback because we made an improvement to all-time highs, but that came at the expense of the technicals, which made a lower high, as you can see. So hence the pullback. But the breakout, since this high here, the market continues to hold above that line. In fact, let's zoom in so we can see that clearer. This is a 1-year daily. Let's go to a three-month daily chart. And we can see that this is the previous daily closing high. So we take that number, which is 6321.76, which again is this daily closing high right there. And then we're going to draw a line from there. And you see what's going on here is we broke out. We've come back to test the line, did not close below it. Tested it here, did not close below it. In other words, we are still holding above the line. Broke out, we've tested the line a couple times. As long as this is holding, one can expect the market to recover. And if we end up breaking this at some point, then that is when we can expect a stronger move to the downside. To be honest, we are not really surprised with the market's resilience. Why? Because we've been expecting the market to continue trading and holding well as long as its monthly RSI is above 69.1. We've been expecting the market to be sideways to outright bullish. And that's exactly what we are getting even for this past week. And I will show this chart, which is the Nasdaq 5-year monthly. Here we moved above 69.1. We held above 69.1 for the next 2 years throughout this phase. And yes, we got pullbacks, but they were shallow. It is only after we broke below 69.1 that we eventually get this drop and another drop here. But this is after the market moved away from the 69.1 threshold. We can see here that we continue holding above 69.1. Hence, the market should still be sideways to bullish. You can see here for the Dow, and this is a 5-year monthly for the Dow. Since about late 2016, we've been holding above 69.1. That's why the Dow has been sideways at worst, bullish at best, and that's why it continues screaming to the upside. Not only is the Dow above 69.1 on its monthly, it is also has been holding above 69.1 since about mid-May, and here we can see sideways action to bullish, and that's exactly the characteristic of a market that is holding above 69.1 for the Dow. And keep in mind also for the Dow, it's going to take a lot of work to break this market, because if you take the RSI lows line even on the weekly, as we saw for the Nasdaq, the Dow has a line here that the market would have to break this line first before we would see any type of a serious drop. Now, something else I should add here, because we are making this stay above 69.1, we've been holding above 69.1 for a couple of weeks. Chances are, even with a pullback, that we are still gonna make higher highs because of the duration we've spent above 69.1. It's another way of saying, take a look at this example here. We held above 69.1 for a period of months. So ultimately we pulled back, yes, but eventually, because of this strength, eventually we would go on to make new highs. So here I would anticipate, unless the monthly charts break down, that at some point we are going to pull back, but the market would have to tag new highs before we can see any major highs. In fact, for the Dow, we even have the Dow holding above 69.1 on the daily. This might explain why the market has been strong, refusing to pull back this past week. The Dow Daily jumped above 69.1 and continues to take off. So as long as the daily, the weekly, and even the monthly are trading above 69.1, the market continues to be absolutely strong. Pullbacks are going to be shallow during this phase. As we come closer to the end of Friday's session, we can see that the hourly for the Dow is also now holding slightly above 69.1. Again, a sign of a market that is absolutely strong and will not pull back as long as we are seeing it hold above 69.1 on the big time frames of the weekly and the monthly. We also see the S&P 500 on its weekly holding above 69.1. Of course, we know that the S&P 500 has been above 69.1 on its monthly RSI since, let's call it, January of this year. Throughout this move, market's been holding above 69.1, so we are not surprised to see this acceleration, or at least a continuation of a sideways to outright bullish market. If we take a look at the S&P 500 hourly, we can see that there's this line here, which was a negative divergence line. The market made an improvement to new highs, but the RSI did not follow through. That negative divergence is the reason why I could say we stalled. But if you extend the same line, you can see that we are coming back to test that line there. And then there's also a line connecting RSI lows. So it should be something like that. So we seem to have gone into a sideways mode for the S&P 500 here, while we are trying to resolve this wedge on the hourly. So either we break out and continue recording all-time highs, or we break down for a little bit of a bigger slide. Now, if we take a look at the 5-minute chart for the S&P 500, you can see that the recent lows right here came on cue when the market found support right here on this line. So we can say that as long as the S&P 500 is holding above this line, even on a 5-minute window, that the market continues to be stable to bullish. Let's take a look at one chart that could be, if I'm looking for a reason why there could be a pullback for the SPX, goes back to this line here, which is the recent break of the highs. The break right here. Market's been coming back to test this past week, and as of right now we've been unable to move above this line here. So this could be a problem, but it's a short problem. It's not a major problem because we have very strong monthly, weeklies, and daily charts. Unless this can be confirmed as resistance, market is unable to move above that. If that happens, then that is when we can expect a bigger slide. But that's a tough call. because really you'd be stretching it. The bulls are firmly in control at this stage of the market. Subscribers, be on the lookout for part 2 of this weekend's market analysis video. And for the rest of you guys, enjoy the rest of your week. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo!